Thank you for tuning in. I am the charity director for Ecclesiastical, so I'm kind of like the linchpin between the actual sort of insurance covers and what's going on in the sector. So hopefully today we can sort of clarify what the covers are, where they are, and all the rest of it. As you will see from my slide, there is a bit of a reference to probably the most high-profile alleged fraud at the minute with Mr. Trump and Don't Steal the Vote. I thought I'd stick that in there. If nothing else, I find the fact that people will defraud a charity massively depressing. And I thought we might just want to lighten the mood after Jackie's examples. But don't forget Jackie's examples, because we really do need to focus on this. I think the other thing was, and it's a similar theme to what Jackie said before, is don't forget it, whether the fraud has occurred or not, even if there's allegations or alleged fraud, or people have the impression that there's fraud going on, that can be as equally as damaging. So prevention's better than cure, and having those policies and procedures in place that Jackie mentioned. Insurance should really be seen as your fallback position and the safety net if things go wrong. Okay, but I really just want to stress that sometimes it's not what actually happens; it's what people perceive to have happened. Okay, if we go to the next slide, we'll just sort of high level, and this is very high level. When I talk about fraud, whether it be internal, external, I'll walk you through, but the main areas are money, fidelity, and as you probably guess, it'd be cyber crime as well, because that tends to be the way the world's going. Cyber is a great environment because you don't actually have to physically be at the point of danger. From a criminal's perspective, you don't have to, you don't have to walk into a premises. You don't have to be seen or caught on CCTV. You could be this completely anonymous person somewhere in the dark net operating in that means. Okay, so we will walk through those covers. They're probably the main covers, but it's just to make you aware that you can buy a standalone crime policy as well. And what the crime policy is probably the best way of describing is what it's doing is picking up elements of the three other covers and packaging them together as just a sort of standalone individual crime policy. So it's just dealing very specifically with that area. I will go on, once we've covered those areas, I will go on to talk about the fallout, because as in the hospice that Jackie talked about, there is potential for fallout. It's not just necessarily about the financial impact. There can be other impacts, and that might draw in covers for things like reputational risk and trustees' indemnity or trustees' liability. Okay, so we go on to the next slide, and we'll start with money. Now, as you might guess from the pictures, money is, I'm getting old. Money sort of begins to feel a bit old-fashioned, and I mean hard cash. This probably sort of harks back to more cover around the traditional, as we've got there, the Bonnie and Clyde, the Hatton Garden. It tends to be more about either physically breaking in or physically attacking a building, or physical in the sense of with menace, holding up premises and the likes. I think it's quite, it does have elements of fraud, which I will come on to, but the covers are there for the more traditional theft, and it is quite flexible because you can change it for what theft are going to happen during business hours. Tends to be more the hold up risk. Outside business hour tends to be more physical attack on a building and a safe, and also getting money to and from premises. Most covers will also give you slightly increased limits for fundraising events. So rather than having to phone people like Jonathan at your brokers and say, I'm having an event, I need more money cover, they will give you automatic cover there. And they will also provide sort of like personal accident cover. If you should, very unfortunately, be caught up in a sort of physical attack, sort of attack and grab cash and run sort of scenario, it will actually provide sort of personal accident cover there. Okay, but from the fraud element, there will be cover for credit card fraud, and obviously credit card fraud will be the organisation's credit card, so it will be an internal fraud. I think what I would say about this is that the money section is quite traditional, so the credit card has sort of come later, so it does only provide limited cover. You'd only probably get a couple of £1,000 per transaction on the credit card. So, it's a good product. You do need it if you're dealing in cash. It's just to make you aware that you might expect a money cover to pick up sort of money fraud. It's just to make you aware that it's not. With regards to the physical cash, you know, the conditions on the policies will relate to security, quite obviously. So what do you do with your keys? Do you remove them from the premises? Certain safes are basically built to withstand an attack, and they're actually tested. And different safes have different limits, so it's about understanding how much cash can you put in any specific safe so you don't breach the condition on the policy. And likewise, traditional money tends to be most exposed when you're getting it from your premises to the bank, and therefore there's escorting conditions. So a sensible number of people, different routes, different times of the day, and all the rest of it. I think I used to be sort of more a surveyor on the ground, and I'm probably showing my age. One of my customers sort of was at the early stage of pre-cut veg. And because they were at the forefront of it and new at market entry, they actually were making a hell of a lot of money. And it was a family-owned business and still dealing in cash, quite traditional in their approach. And they sent the granddad who set up the business originally. Granddad took tens of thousands of pounds of cash to the bank on a weekly basis. So, you know, don't do that. That's not a good idea. Okay, we move on to the next slide. This is, now we're really getting into it. This is the internal fraud. It tends to be referred to as a fidelity guarantee. And fidelity guarantee, you know, flip it on its head. Simplistically, it's an insurance policy that guarantees the honesty of your employees. So internal fraud, very much driven. I would massively back up what Jackie was speaking about earlier. What we tend to see is we don't tend to see these claims that often, but when we do see them, they tend to be really big, because what they've been doing is they've been going on over a very long, protracted period of time. So it all starts to mount up. I think the other thing that I would sort of say as well is that I do have a sneaking suspicion that this is an underreported crime and an underclaimed crime as well, because I think the reputational issues that can be associated with this, I think some people, depending upon the value that's been lost, sort of err on the side of public relations and sort of say, we don't really want to come clean about this. We'd rather just sort of keep it quiet and move on with our life and learn from our lessons. The cover does actually extend. It's not just pure money. It does extend to goods. So it could be stock that's been sort of taken out the back door by employees, and again, it's a very flexible cover, because you can choose how you arrange the cover and set varying limits for, you know, is it just employees, volunteers, you know, and is it named employees or named volunteers, and you can end up with quite a combination and variable limits for each sort of group that you choose. So it does provide a lot of flexibility. I think the thing that you need to know about this cover in general is that if you suspect something is going on, or something's not right, or you actually discover an internal fraud, speak to your broker, speak to your insurer as soon as possible, because the cover stops as soon as it's discoverable. So if you sort of have a suspicion, but you don't actually speak to your broker, but you allow it to go on, so you don't think. The problem is you sort of, from the insurer's viewpoint as well, you had a suspicion, but you didn't really do anything about it. So we will only pay the claim from that point back in time. So the sooner you speak to your insurer and broker, the better. It does exclude shortage or shrinkage is what I'd probably hear about it in the retail trade more often, but you know, you can't just do a stock take at the end of the year and say, well, we should have this, but we're short, so we'll just claim. That it's not designed for that kind of cover. It's got to be tied to a specific event, specific individual, specific activity. Okay. The conditions are very, as you'd understand, this is quite high stakes cover. Internal fraud's probably got more potential to steal than an external fraud in many respects, because they're already inside the organization. A lot of the checks and balances have already been, aren't applied to them because they're an employee, not someone outside. And those conditions will be written into the policy, and you need to make sure that you understand them and you comply with them. But to be honest, they're all the things that Jackie talked about is good standard practice when it comes to sort of internal audit and credit control. So take references. The policy actually says that they've got to take holidays. Now, we do quite often get asked about this. When we say holidays, we mean at least different duties. And splitting responsibilities and the various things they are on. You can read, I'm not going to read them all, but it's the auditing and controls, okay? So that's fidelity. Moving on to cyber. Cyber, the first thing I'd say about this is you could buy a cyber policy, but it might not have cyber crime. The first thing is to make sure that you buy cyber crime insurance, and obviously this is aimed at external fraud, predominantly because that is the way that criminals are operating now, is electronically. Okay, so you might have a cyber policy, but it might not include cyber crime. So that's the first thing to check. It is actually very wide cover, I would say. It's anything that's electronically enabled, so it's electronically enabled crime. It has conditions, but not the kind of conditions we've just talked about in fidelity. And the conditions are a lot more flexible, I would say. The mandate fraud that Jackie talked about earlier, that if that mandate fraud's done via emails, as Jackie alluded to, then that would be electronically enabled, and that would be picked up by a cyber crime. Okay, it covers, as it says there, quite a wide variety of things. Everybody thinks about the money transfer or the mandate fraud, but there are other things in there as well. So it could be a transfer of services, property, financial financial benefit, as well as credit arrangements made fraudulently in your name. And the other one that we see quite a lot is also the sort of hijacking of your telephone system, and then the criminals will use your phone system to basically run what they would perceive as their business, and rack up very high phone costs, which you're left to pay the damages for. The last bit, I think, is the sort of underplayed bit in some respects. Everybody wants, when you talk about insurance, everybody wants to know about what you're going to pay, how much money am I going to get? I think with the cyber policy as well is equally important is specialist support and services. So you will get access to specialists that can help detect, stop, and repair any damage that the attack is, the attack on your IT system. And it can also help you with stopping them sort of publishing data that they've stolen, or fraudulent malicious use. Now, again, most organizations don't have highly specialized IT people that can deal with these kinds of attacks, a DOS attack or a DDoS attack. Therefore, access to these will, at that point, when everything is falling down around you, access to their services will, I suggest, would be invaluable. Okay. Now, you probably heard a lot about
Angus, we've just lost your audio there, Angus.
Where it's time to drop a poll. Do you think it is morally right that insurers should pay blackmail, ransomware, malware ransoms? Do you think that's right? And will it just, or do you think it's wrong? And there's a lot of debate in this area, and the debate usually revolves around that by paying, are you just perpetuating the problem? Or are you just sort of, you need to be a bit more selfish in some respects and just make sure that your organization's all right? Because that's the one thing that you do see in this area is that once you're attacked once, you're probably likely to be attacked more often. Okay. All right, we will get the results of that poll a bit later on. So that's fine.
There you go, Angus, I can share them with you.
Oh, right. Oh, instantaneous. All right. Wow, well, it's quite strong on the nose, which is very interesting. Right, okay, that's interesting. And then, so a third undecided, but very few yeses. All right, okay. Well, maybe you can pick that up in the Q&A session at the end, but that is interesting. Quite strong in one way, but not the other. Okay. Other things that you need to know about is that for the cybercrime cover, they do expect that you keep your hardware up to date, you maintain it, you inspect it, you keep your software up to date, and you keep all the antivirus software up to date as well, and that you do backups. Okay, quite straightforward standard things that you probably should be doing anyway. Jackie's mentioned a few, but there is a link on the slide which you can get copies of at the end, which is a classic mandate fraud. The one thing that I would add to what Jackie, and I'm speaking as an insurer, is what we usually find is that the charity's getting some building work done, and what they do is they spoof that building contractor. That happens quite regularly. Okay. The last slide is this other bit, the fallout. Okay. I think the thing to be aware is that if fraud's occurred, you might end up getting investigated by the Charity Commission. Think about how your employees and volunteers feel, how your beneficiaries feel, how your funders are going to feel. You know, you might actually come under a lot of flack for what's happened, and that might mean that people actually take action against the trustee individually. And obviously, trustees' liability insurance provides that financial protection to the trustee who may be personally liable for paying any damages. Okay, so that is a fallout. And the other one's a reputational risk. Again, how do we deal with this? How do we do with the press? How do we manage this situation? We provide sort of two themes on this. We provide a free sort of half-hour consultancy with a PR company that you can phone up. But that might not be enough due to your organisation, what you do, where you work and how you operate. You can buy reputational risk cover that will give you sort of cover up to X amount to use the services of PR media firms to manage the situation. What it would have to be, though, is it would have to be linked to another claims, usually under trustees' liability, and dealing with that. But some markets do provide it separately.